Every great empire in history leaves behind a trail of warnings, subtle cracks that only become obvious after everything has already fallen apart. Rome dismissed its spiraling debts and currency debasement. The British Empire ignored the draining cost of wars and the global abandonment of the pound. Even the Dutch, once the masters of world finance, failed to see their decline until it was irreversible. And today, the United States stands at the same crossroads, following the same pattern with almost mathematical precision. For decades, America's financial system looked invincible. The world's reserve currency, unmatched military power, unlimited access to global credit. But beneath that surface of strength, a silent breakdown has been unfolding. Debt has reached levels once considered impossible. Global alliances have shifted. Major economies are experimenting with alternative trade currencies. And for the first time since World War II, nations are openly preparing for a future where the dollar is no longer the center of the world. Historians who study the rise and fall of superpowers call this the hidden decade, the 10-year window where decline accelerates, but the public still believes everything is normal. It's a period marked by rising internal divisions, weakening institutions, aggressive money printing, and the slow erosion of trust in the financial foundation that once held the empire together. As we enter 2025, that hidden decade is no longer approaching, it has begun. The signals are visible, the stages are unfolding, and the timeline is already in motion. In this video, we will uncover the concealed sequence from 2025 to 2035 that exposes how America's financial collapse could unfold year by year. Not based on speculation, but on the same historical blueprint that predicted every major empire's fall before it. The year of irreversibility. Every empire has a moment when the decline becomes permanent, when decisions made decades earlier finally collide with economic reality. For the United States, 2025 marks that moment, not because of one dramatic event, but because a series of long-ignored problems finally converge into a single, undeniable financial truth. The system can no longer sustain itself without extreme intervention. By 2025, the U.S. faces a historic milestone. Interest payments on national debt exceed both defense spending and social programs, something no previous superpower survived for long. America is spending more just to service old debt than to protect itself or support its people. Economists call this the doom ratio, a sign that a nation has crossed into permanent fiscal stress. But the deeper shift is global. For decades, the world relied on the U.S. dollar for trade, savings, and stability. Now key nations China, Russia, India, Gulf states are aligning to reduce dependence on America, not in speeches but in actions. Long-term oil contracts settled outside the dollar, regional payment networks bypassing U.S. banks, rising gold reserves replacing U.S. treasuries. Shifts may seem small individually, but together they represent the first fracture in America's financial dominance. Inside the U.S., political polarization reaches levels unseen since the Civil War. Every major economic policy from taxes to interest rates turns into a battlefield. With no unified vision, America's ability to respond to crisis weakens. Historians note this pattern. Empires fall not when enemies attack, but when internal unity collapses. 2025 is the first year the world glimpses a reality once unimaginable, a future where the dollar is no longer king. The decline is still slow, almost invisible to the average person. But for analysts, historians, and global financiers, the signal is clear. The irreversible decade has begun. If 2025 is the awakening, then 2026 to 2027 become the acceleration. America's debt has been growing for decades. But now it enters the phase historians call the compounding trap. Every trillion added creates the need for even more trillions, simply to keep the system functioning. It is the same trap that consumed the British Empire after World War II. In these years, the Treasury becomes increasingly dependent on issuing short-term bonds, because long-term buyers are disappearing. Foreign nations, once the backbone of U.S. debt financing, now hesitate. They demand higher yields, essentially saying, "We don't fully trust this anymore." Higher yields mean higher borrowing costs, which deepens the spiral. Inside America, inflation becomes sticky. Even if the Federal Reserve raises interest rates, prices refuse to fall. Households feel the squeeze, businesses cut hiring, and the middle class gets thinner. The Fed becomes trapped between two terrible choices. Raise rates gives trigger recession and debt shock. Cut rates gives trigger inflation and currency weakening. This is exactly the position the British government faced in the 1950s, trapped between global obligations and domestic instability. Meanwhile, global trends accelerate. Countries increasingly diversify away from U.S. banking networks. The idea of a multipolar currency world, once dismissed as fantasy, gains traction. The IMF warns that global trust in the U.S. fiscal system is weakening. By late 2027, one thing becomes clear: America cannot reduce its debt without breaking its economy, and cannot continue borrowing without breaking its currency. This is the core of the debt spiral, an unwinnable equation. Empires do not collapse because of debt alone, but because they lose the ability to manage it. And by 2027, the U.S. loses that control. Between 2027 and 2029, the world undergoes a transformation that was unthinkable just a decade earlier. The petrodollar system, America's greatest financial weapon, faces unprecedented fragmentation. Saudi Arabia, the UAE, Brazil, Russia, and China negotiate long-term energy deals using alternative currencies, not fully abandoning the dollar but reducing reliance on it. This is exactly how the Dutch guilder lost dominance to the British pound in the 1700s, not in war, but through slow erosion. The U.S. still controls global finance, but its influence weakens. Sanctions, once a powerful tool, start losing impact as rival payment systems expand. BRICS develops commodity-linked settlement systems. Africa and South America explore regional digital currencies. Europe pushes for greater monetary independence. In America, political divisions deepen. Two economic visions emerge. One argues for more spending to stimulate growth. The other demands aggressive austerity to regain control. Neither side wins. Instead, policy becomes inconsistent, swinging widely every election cycle. This instability shakes investor confidence, accelerating capital flight from U.S. bonds. Technology also plays a role. Nations experiment with blockchain-based trade systems that bypass American banks entirely. These systems are more efficient, cheaper, and not subject to U.S. political pressure. For the first time in modern history, the world has a viable alternative to the SWIFT dollar network. By 2029, the dollar is still dominant but less essential. Its global share has slipped below a psychological threshold. Businesses, central banks, and governments now see diversification as protection, not rebellion. The power shift is not loud. It is quiet, technical, and incremental. But it is historically decisive, the moment when America's financial empire begins losing its monopoly. Most financial collapses are invisible at first. They happen quietly, behind bank doors and spreadsheets, in bond auctions where too few buyers show up. The average citizen feels only mild discomfort: slower growth, higher prices, shrinking savings, until the discomfort becomes a crisis. This is the silent collapse, and between 2029 and 2031, it becomes America's new reality. Inflation stabilizes at high levels. It's not hyperinflation, but a structural, persistent erosion of purchasing power. A gallon of milk, a month's rent, a simple grocery tripal slowly become luxuries for millions. Savings accounts lose value faster than they grow. The dollar remains stable compared to foreign currencies, but unstable domestically. U.S. corporations begin quietly relocating operations to countries with more stable financial outlooks. Capital flows out of America, not dramatically, but consistently. Billionaires diversify into foreign assets. Pension funds struggle to meet obligations as bond markets weaken. The government responds with stimulus programs and currency injections, trying to relieve pressure. But these interventions resemble Rome's repeated currency debastements. Temporary fix that worsens the long-term problem. Meanwhile, global trust deteriorates. Nations hold fewer U.S. treasuries. International trade agreements exclude the dollar. For the first time, the U.S. faces difficulty refinancing its debt without central bank intervention. Inside America, society becomes strained. Rising inequality, political radicalization, distrust in institutions, classic symptoms historians recognize from late-stage empires. Every crisis, whether economic or social, becomes a political weapon. By 2031, the collapse is well underway is not acknowledged. The stock market remains high, but real wealth evaporates. Employment numbers appear stable, but wages lag behind rising costs. America is still functioning, still powerful, still wealthy, but the foundation beneath it is eroding quietly, and soon the silence will break. Every reserve currency in history reaches a moment when its dominance collapses not slowly, but in a sudden shift of confidence. For the British pound, this happened in 1967. For the US dollar, the breakpoint emerges around 23.1-23.3. By this stage, foreign demand for US bonds falls sharply. The world no longer needs American debt to function. The US must offer much higher yields to attract buyers, which explodes the cost of refinancing trillions in existing debt. The Federal Reserve steps in as the main buyer move that signals desperation. Global markets begin losing faith. Not instantly, but rapidly. The dollar undergoes sharp valuation shocks. International investors shift to commodity baskets, digital currencies, and regional units. The IMF warns of structural instability in the U.S. fiscal system. Emergency policy proposals emerge, capital controls, restrictions on foreign money flows, emergency stabilization funds. Inside America, the situation worsens. Housing affordability collapses. Wages stagnate. Debt burdens grow. Consumer credit defaults rise. The government attempts to maintain stability, but political gridlock makes coordinated action impossible. Everything becomes a debate. Nothing becomes a solution. The dollar's breakpoint is not a total crash. It is the moment the world accepts that the dollar will no longer serve as the global anchor. Confidence is a currency, and America loses it. Once lost, it cannot be restored. This period mirrors the late-stage recession of every declining empire. Financial power translates into military power. When one falters, the other shrinks. America begins quietly reducing its global footprint, closing bases, cutting defense budgets, and restructuring alliances. Major industries suffer. Manufacturing contracts. Tech companies face global competition. The American consumer, once the engine of world growth, can no longer sustain the system. Domestic unrest grows. Protests, political violence, government distrust, and financial anxiety spread. The social contract weakens. The U.S. enters what historians call the Empire Recession, a long, grinding period of weakened power, shrinking influence, and internal instability. In 2035, the world transitions fully into a multipolar monetary system. The dollar does not disappear, but it loses its throne. A new reserve structure emerges, part commodity-based, part digital, part regional. America becomes a normal great power, not the global financial ruler. A new era begins. History rarely gives a clear warning before an empire falls. But this time, the signs are carved into the decade ahead of us. From 2025 to 2035, America will walk the same path traveled by every great power before it, not because of a single mistake, but because the forces that built its dominance are now turning against it. The debt, the division, the dollar's weakening foundation, the global shift in alliances. All of it forms a pattern older than the United States itself. But here's the truth. History reminds us again and again. Collapse is not the end. It is a turning point. When a superpower falls, a new world is born, and those who understand the timeline are the ones who survive it, adapt to it, and rise with it. As we stand at the edge of this hidden decade, the question is no longer if the transformation is coming, but whether we are prepared for the world that will emerge after it. The era of American financial supremacy is nearing its final chapter, and a new global order is waiting to be written.